If you're thinking about buying a house, you might be wondering, what are the closing costs that I might face, and are there any hidden costs that I should know about? Let's dive into the basics of closing costs and what it entails. So basically, you've got three categories of closing costs. That would be number one, lender fees, which lender fees are the only closing costs that a mortgage lender has any influence over. So that would be things like origination, underwriting, processing, administration fees, so on and so forth. There's a bunch of different names for them. Some lenders add more junk fees than others, but lender fees is one component. Now, component number two, which is the largest bulk of costs, would be third-party fees. So third-party fees are costs that you would pay for the appraiser to go appraise the home. There are credit report fees to get the credit report for the mortgage company to actually underwrite the file. There are title fees. Now, some other sneaky third-party fees that you may not think about would be like HOA fees. So HOA fees, the homeowners associations, if you're buying in a homeowners association, can charge certain fees. They can charge to obtain the documents that are required for the lender to underwrite and approve the property for financing. But additionally, they can charge you an administrative fee or a transfer fee. There's various names for these, but they can charge you a fee for becoming the new owner. And this fee can range anywhere from just a few $100s to multiple thousands of dollars. So that would be one of those sneaky fees you got to be paying attention to if you happen to be buying in an HOA. So we've got lender fees, we have third-party fees. Now the next bucket of fees, or costs we should say, because these are not transactional fees, but instead costs of homeownership that you face, and there's some front-loaded expenses that you have to pay to get things going. So these prepaid expenses include prepaid mortgage interest, homeowners insurance, and property taxes, which fund your escrow account. So let's dive into prepaid interest. Prepaid interest, how mortgages work is mortgage payments pay interest on the mortgage in arrears. So what that means is if you close in the month of May, your first payment, any day you close in the month of May, your first payment would be due in July. Well, July's payment would be paying June's interest. So you close sometime in the middle of May, you have to make the interest payment up front. It's called prepaid interest. You have to pay the prepaid interest from the day you close in May through the end of May because you're not making a payment in June, which would have otherwise paid the interest for the month of May. So prepaid interest, you have homeowners insurance. So homeowners insurance, you pay for the first year of homeowners insurance up front. Whether you have an HOA or you don't, we recommend getting homeowners insurance. The policies are very different and the costs are very different, which we can help you with those details if you're actually buying. But you pay the first year up front, and then additionally for homeowners insurance and property taxes, you would pay an additional approximately 3 months of each into the escrow account. And the reason there's 3 months is, again, going back to the example, if you close in the month of May, you don't make a payment until July, but you still need to pay property taxes and homeowners insurance for May and June, which you're not making a payment. In other words, you're not funding any money into the escrow account. So you prepay a couple of months for those 2 skipped months of payments, but additionally you have 1 month in reserves that helps guard against those costs going up in the following year during the first year of homeownership. So to recap, the closing costs that you'll face is lender fees is bucket number one, bucket number two, third-party fees, which is the largest bucket of them all. And then bucket three is prepaid expenses, which are just simply costs you must pay and front load, and they're just costs of homeownership. You're not paying any service provider for anything. Outside of that, the only thing that you should be paying when you're buying a home would be potentially discount fees or buy-down fees if you're trying to get a lower rate. There are upfront mortgage insurance fees that are generally financed into the mortgage if that applies. And outside of that would be something like a home warranty or a home inspection, which are outside of the mortgage, but maybe costs that you face when purchasing a home. So there you have it. That's a breakdown of the closing costs, hidden fees and not hidden fees that you might experience when buying a home.